Hello, this is Paula and I'm here with the weekly blockchain brief. I want to start by briefly thanking you so much about the positive feedback we received on the video last week, and I want to encourage you to write any suggestions that you might have on what you want to see more in this brief. So, I'm starting with the news of the week. The first one is a long-awaited one. The Ethereum Merge has been a hot topic for a while, and we finally are here with a clear time frame. The network ran its final test before the official merge successfully, and based on the announcement, they're going to be executing the merge on the mainnet on September 15 to 16, which might get extended to September 20th. And here's something worth mentioning is the arbitrage trade between staked ETH and ETH. The gap was pushed all the way to I think around 7-8%, and currently, despite the specific announcement of the date of the merge, there is still an opportunity. As of the moment of this recording, it's still 3%. Here is a graph. And the next news is coming from Coinbase and their earnings report, which came quite unexpected, not in a positive way. The analysts were predicting approximately $2.65 loss a share, while the actual loss came to almost $5 a share, or more precisely 4.98. This means that the Coinbase revenue shrunk by 61% in the latest quarter. There are two main sources of that loss, and the first one is the plummeting trading volume, which might be due to the crypto winter, or it might be due to the loss of trust in the users of the platform, because Binance was just reporting relatively same trading volumes as last year. And Coinbase revenue actually went down by almost 70%. The other reason for the drop in revenue is the $446 million impairment charge on their crypto and venture investments. Or simply said, impairment charge means unrealized loss on positions. So, for example, if they were holding Bitcoin at 60,000 cost in their treasury, and now the price is 20,000, this 40% gap becomes the impairment charge or the unrealized loss, which has the potential to recover. So, just to summarize, the total loss amounts up to $1.1 billion, which is huge. Just to put that number into the context, they had $1.6 billion revenue during the boom of crypto last year. These were very active weeks in terms of news for Coinbase, or more particularly the last 1-2 weeks. They announced the partnership with BlackRock for allowing institutional users access to crypto, and this is something we talked about in our previous video, as well as a leveraged ETF on the Coinbase share was just announced together with the earnings reports. All of these caused a lot of volatility in the trading of the stock, and finally it ended the week on a 10% loss. Next, we have another traveled exchange, Hotbit. There is not too clear information on the matter, but there was an announcement made by Hotbit itself that the trading is temporarily suspended because their funds are frozen by authorities. The funds freeze is a result of alleged actions of a former manager at Hotbit. However, there is no further information, neither on the investigation or when we can expect the trading to be resumed. However, all the pending trades were invalidated on the platform to avoid losses once the trading suddenly resumes. Hotbit is a smaller exchange compared to, let's say, Binance or Coinbase, but however, it's big enough to affect the market. Hotbit has users in more than 170 countries, as well as their trading volumes are around $350 million per day. And the last news of the day that we picked up is a platform that will be launched by Paradigm and FTX, which will be allowing crypto futures spreads trading. While Paradigm has been already offering futures trading on their platform, the partnership with FTX will allow them to give access to the so-called cash and carry trade. So what that is? Simply, the futures are usually traded at a premium compared to the spot. So once you have bought the spot and the futures at the same platform, one can go and short the future by buying the spot and locking that certain amount of profit until the futures contract expiry. This is big news for the industry, since Paradigm has more than 1,000 institutional investors, such as family offices and hedge funds, as well as $10 billion monthly trading volume. This means that we're gonna see increase in the price efficiencies of the tokens that they will be trading there. They are, to start with, only 8, which will be BTC, ETH, Solana, AVAX, Ape, Dogecoin, linked as LTC. Then we continue with macro talk. We were waiting last week for the inflation announcement, which came lower than expected, showing signs of cooling inflation. However, something to take into consideration will be that the core inflation is still the same. The core inflation is basically the same index except for highly volatile goods such as the food and energy. So we might say that the drop is mainly due to the fall of the price of the gas. The gas prices in US decreased from $5 to almost $4 a gallon, as well as all the main commodities such as copper, wheat, and corn also experienced a drop after hitting an absolute high earlier in the year following the Ukraine invasion. Food and energy are very volatile, so they are usually excluded from that core inflation, and this is mainly the indicator we need to be looking at. However, there were some other positive economic news for the US economy. 528,000 jobs were added for the month of July, as well as the US administration passed a bill to control inflation by increasing corporate tax rate as well as decreasing the cost of healthcare. All that said, we probably expect the Fed to continue hiking the rates until they reach their target goal of 2% inflation rate. We are at my favorite part of the brief, the venture capital, or more of what we in SwissBorg Ventures had been up to, as well as most of the institutional investors out there. In those major rounds, to note that there is still a lot of funding available in the industry, and the VCs continue to invest in spite of the crypto winter we are currently at. So since many project founders come to me and ask me like what we are looking for in a project and what would make us invest, I would say that it's really important to have the right team as well as the right project, something that would make a difference and it's solving an actual problem, as well as having traction. The last one is really maybe the most major one and the first thing that you need to look at. There are many projects out there trying to raise 100 million without even have a prototype or an MVP. So I think it's very important to base your valuation on the traction or the number of users you're having. And it's always better to bootstrap until a certain point and then go to VCs, which you can take more as partners else than simply fresh money coming to the project. Anyhow, without further ado, let's go to the first one, the Frankfurt-based Concealer Games. They are a AAA game developer, and they closed this funding round to develop a platform called Gunzi, which will allow the users to trade their in-game possessions there. And another highlight maybe to take from the funding rounds this week is that VCs prefer to invest in gaming studios rather than single games, because gaming studios will keep on producing games while a single game can be way too much of a risk. It either works out or doesn't. It's something like a digital option, right? So here comes also the second announcement that Amber Studios, also a game studio, reached a valuation of $65 million by raising their current funding round. And the round was led by Spartan Group, which does a lot of gaming projects lately. The last news that we picked up is a massive $150 million round, which was by Aptos Labs, and the round was led by FTX and Jump Crypto together, but we can see a lot of prominent investors on the cap table as well. There is Circle, A16Z, as well as the traditional investor Franklin Templeton. Something very interesting about Aptos Labs is that it has been established by 2 ex-Meta employees that were working on the failed DM project. And the language that is used in Aptos, called Move, is basically a version of that DM language. And the last thing to mention about the round is that the company reached the huge $2 billion valuation by raising that $150 million. That was everything from me this week. I hope you enjoyed it. And as I said, feel free to send us your suggestions on what you want to see more. And we hope you have a great week ahead.